CNBC TV 18, embarking on a quarter century of excellence.
Wall Street rally continues. The Dow notches gains for the 9th straight day, while the S&P 500 nears a record high. Stocks in the Asia-Pacific open higher, with the Nikkei extending its gains following the dovish BOJ decision. The GIFT Nifty also suggests a positive start for the Indian market. Oil price is steady, with Brent hovering around $79 a barrel as tankers shun the Red Sea on the back of heightened attacks by Houthi militants. Gold price is firm above the $2,000 mark on the back of soft US dollar and lower US yields. The Reserve Bank of India tightens rules for banks and NBFCs investing in alternate investment funds, says they have to liquidate their investments within 30 days if the fund has invested in an existing borrower. The move is aimed at preventing lenders from utilizing the AIF route to evergreen their loans. Stationary major DOMs and affordable home financier India Shelter Finance are all set to make their debut on D Street today. The 740 crore issue of aerospace component and turbine manufacturer Azad Engineering will also open for subscription today. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Wednesday morning. There's a lot to track and the global handover has been very positive from the US. You have all of the Asian markets which are up and about in trade. What's clearly leading the gains this morning is the Japanese Nikkei markets after the Bank of Japan kept policy unchanged and maintained their extremely loose policy. So that has been a positive and that market is up over 550 points. Seng, Taiwan, all doing well in early trades. So the Hong Kong markets up 1.2%, like you can see. Taiwan is also holding up with a 30-point gain right now. And across the board for the Asian markets, it's been quite good. So whether you look at Kospi, Straits, Shanghai, all of them are doing quite well. They were a little bit muted in trade and actually saw some cuts as well yesterday ahead of the BOJ decision. But today it is looking like a solid start. Let's also bring up the GIFT Nifty for you because it is indicating a good gap up opening for our own markets. 82 points higher is where we're at as far as the GIFT Nifty. So that's what's going on across the Asian markets. But let's talk about the US now because Wall Street ended Tuesday's trading session higher. The Dow surged over 250 points and the S&P 500 was up over 0.5%. It's very close to another record high as well on the S&P 500. The tech-heavy Nasdaq, take a look at that. That also closed almost a full 100 points in the green. We have CNBC's Bertha Coombs to get us a wrap of all of the action that played out on Wall Street. Bertha.
The major averages all up across the board on Tuesday as Wall Street tries to extend the rally now to 8 straight weeks of gains. The Dow up 252 points, the S&P 500 approaching a new record high at 28, and the tech-heavy Nasdaq gained 98 points. Google's parent company Alphabet has agreed to pay $700 million to U.S. consumers in a settlement involving its Google Play Store. The tech giant will also make changes to the store to allow for more competition. The agreement, part of an antitrust settlement involving all 50 states, Washington, D.C., Puerto Rico, and the Virgin Islands, which had accused Google of overcharging customers through unlawful restrictions on the distribution of apps on Android devices. New home construction saw a 15% surge last month, defying expectations of a modest decline. And single-family home building increased 18%, which is the highest level we've seen since May 2022. The interest in building new homes comes as mortgage rates have dropped since the Fed has stopped raising rates. And builders have been offering more incentives to try to bring potential buyers back into the difficult housing market. That's what's happening here in the U.S. Back over to you in Mumbai.
Bertha, thanks a lot for getting us all of that action. In fact, let's also bring you some important voices on how they really see the U.S. markets moving from here on and what they make of the current inflation picture. Listen in.
The last mile getting from 3% to 2% was going to be difficult. My recent reading suggests that there are economists who doubt that now. They think getting to 2% will not be such a difficult task. So I don't know. It remains to be seen if it turns out to be difficult. There are elements of the economy that are sort of structural in nature that could be pro-inflation. For example, I think the labor markets are going to continue to be tight.
I think it's really two or threefold reason for why rates will be coming down. The economy should be running at a much slower pace. We're expecting something like 0.6% in the second quarter. But the other reason, of course, is inflation. Inflation should be hitting 2.7% by the second quarter of next year. And the third reason is, yes, you do have rising defaults, which slow the economy as well. So, but all those forces together, yes, slower growth, but also lower inflation, that's what should cause Fed to eventually cut rates.
Okay, that is the global market setup and some important opinion that we are looking at as well. But let's now talk about all of the cues that you should track from an India market standpoint. Some of the stocks also that could be in focus today. We have Rima, Mangalam and Hormaz all here now. Guys, a very good morning to all of you. Rima, let me come to you first. Looks like a big gap up right now. So we could open close to that 21,500 kind of mark.
In fact, yesterday we hit that 21,500 mark, but there was this late profit booking which took the Nifty off about 50 points from session highs to close around 21,450. But we might make a dash towards that level, and hopefully this time we can conquer and stay above that level. For the last 2 days, the market moves have been very quiet. We've been consolidating. On Monday, the Nifty was down 38 points, and yesterday the Nifty was up 34 points. We've had 2 days of consolidation, and maybe today will be a bigger session where we can break out. Global market cues are positive. You've spoken about it. The Dow was up 250 points. The S&P, Nasdaq rallying close to about 0.6%. The S&P 500 is now just about 1% away from record high levels. And month to date, look at the gains on the US market. The Dow, the S&P 500 have rallied 4.5%. You've got the Nasdaq rallying 5.5%. And the small cap index, the Russell 2000, is up more than 11%. Cues to watch, crude prices are now back above $79 per barrel. Yesterday, 78. Today, it's climbed a little bit higher. In terms of flows, the DII's net bought 294 crore in the cash market, while the FI's net sold 601 crore in the cash market. Big day in terms of listings, particularly DOM's IPO will be watched very closely. Saw a solid subscription of 93.5 times, and the other one is India Shelter Finance. So that also saw good subscription, 36.5 times. So these two listings will be tracked very closely, and Azad Engineering IPO opens today. Back to you.
Okay, Rima, thanks a lot for taking us through all of those cues that we should watch. Let's also talk about all of the stocks. Hormaz, there has been a lot of action overnight. But, as a sector, I guess it's going to be a lot about the IT pack.
Absolutely. And I'll start off with the IT pack because Accenture's numbers will have a rub-off on the IT names, and it maintained its FY24 guidance, and that will be a positive. The 2 to 5% constant currency growth guidance that it maintained for FY24, that should be a watch out for on IT stocks. But there are some block deals that I'd like to talk about. Nippon AMC, which is a clean out trade, and sources are telling CNBC TV 18 that IndusInd Bank may sell up to a 2.86% stake and exit the counter. Astral, where sources are also telling CNBC TV 18 that the promoters are looking to sell up to 2 to 3% stake via block deals worth around 1,000 to 1,500 crore rupees. And the CNBC TV 18 has reached out to Astral for a comment. Another block deal for Embassy Office Parks, another exclusive, and Blackstone is likely to sell a 23.5% stake, which is another clean out trade as well. JK Tyre has launched a QIP. The floor price is a 5.2% discount to Tuesday's closing price, so we'll keep that on the radar as well. Varun Beverages, a couple of updates there. They'll acquire the beverage company in South Africa for 1,320 crore rupees and also set up a plant in Jharkhand with a capex outlay of 450 crores. BPCL is planning to set up a polypropylene unit project at its Kochi refinery and an estimated project cost of 5,044 crore rupees. And lastly, UPL, where the board is meeting on the 22nd of December to consider a fundraising plan. Back to you.
Okay, thanks a lot for running us through all of that action that's come through overnight. We're going to watch for all of these stocks. Mangalam, take us through the cues from the futures and options space. Yesterday was another range-bound session, right?
It was a range-bound session, and, perhaps towards the end of this year, we may have this range continue until it breaks up or breaks down on either side. The reason why I say that is because, you just take a look at the way the market moved yesterday, the low and the high. The Nifty has been consolidating after a big rally in this 21,350 to 21,550 sort of range. Yesterday's low was 21,338, 21,505 was yesterday's high. And now the GIFT Nifty indicates that we will start right in this congestion zone itself. The FIIs have sold about 600 crores in the cash market. DIs bought 300 crores. The important point is that, as we move towards the end of this year, institutional flows will keep thinning out, and as a result of which, we'll see more action shift to the mid-cap end of things. But despite this range, we saw the FIs buy nearly 1,300 crores in index futures, and in that they added around 11,000 long contracts, covered 3,000 short contracts, and the longs have now inched higher to 62% versus 38%. Remember, a couple of days ago, this number was 58% itself. This range that I'm talking about, 21,350 to 21,550, is visible even in the active Nifty options. 21,500 call has been extremely active for a premium of 50 odd rupees, and 21,400 put has been equally active for a premium of 50 odd rupees as well. The key sector to watch out today, apart from the IT stocks, will be the Nifty Bank, largely because the 48,000 call has maximum open interest ahead of options expiry today. Were we to cross that, maybe there could be some short covering out there. And finally, the question, can Reliance lead the next big rally on the index? Because over the last 2 trading sessions, the stock is up around 4% odd. The stock is at a 4-month high, still 10% away from its 52-week high.
All right, it'll be interesting to see if that does happen. Mangalam, thanks a lot for taking us through all of those cues. For now, it's looking like an 80-point bump up as far as the start of our own markets is concerned. With that, we're going to get into a short break. On the other side, like we told you, the RBI has tightened rules for banks and NBFCs investing in alternate investment funds. We're going to bring you all of the details in just a bit. Welcome back. You're still tuned into Power Breakfast. Now, an important story. The Reserve Bank of India has moved to ensure that banks and NBFCs do not use the AIF route in order to evergreen their loans. So it has told banks and NBFCs that if they own units in AIFs, which have invested in borrowing companies, which are also borrowers with the bank, then these banks will have to sell out of those loans within a 30-day period. So Lata is here to decode all of this for us. Lata, take us through some of the finer details as well.
Well, let me explain what exactly the Reserve Bank is worried about. What has been happening is, banks have given loan, not banks, more the NBFCs have given loan to a company that is in debt and that is not able to pay back. What these guys, the banks or the NBFCs do is they buy units of an AIF. Now, the AIF takes that money and gives it to the borrowing company which is about to default, and then defaulter pays back the bank. So you're actually evergreening the loan. So what RBI said is that this won't do. If a bank, if an NBFC buys units in an AIF, which also has lent to one of the companies that has a loan from the investing bank, then they have to, the bank or the NBFC has to sell out of that borrowing company. They can't be lenders to that company. They just want to stop this malpractice. What they have also said is that in case this practice continues and they find that a bank has invested in an AIF, which in turn has lent to their own borrowing company, then that entire amount has to be provided for. You have to make a provision in your books because they suspect that that loan is going to become a bad loan. A third thing that they have said that, they have noticed what AIFs and NBFCs and borrowers are doing is that, a bank has bought the units of an AIF. The AIF has lent it to the borrowing company so that it doesn't default. While writing out the contract, the AIF insists that if that borrowing company goes defunct, becomes bankrupt, then the first charge on the assets will be with the AIF, not with the bank or the NBFC. What RBI is saying is if there is such a provision, then banks have to provide additional capital for the loans that it has lent to that borrowing company. Basically, it wants to stop this malpractice. That's the meaning of the new rules.
All right, Lata, thanks a lot for explaining that to us. With that, it is time for a break. But on the other side, we're going to talk about the commodity space. We'll have Manisha with us to fill us in with all of the action that has come through overnight. Hey guys, welcome back to Power Breakfast. Let's talk about the commodity space now. We have Manisha joining us with an update. Manisha, what are you looking at this morning?
Well, if you look at the crude oil prices, it's the third straight day where we are holding gains onto this one. We did almost into $80 a barrel overnight for the Brent crude oil prices. So it has been stronger gains which seem to be holding on. The weakness in US dollar has been supportive, and now the crude oil prices are trading at a 2-week highs. What the street will wait out for today is the US inventory data in sense of crude and gasoline, where the markets are anticipating that the demand has seen some betterment, and that has been supportive. In metals also, it seems like a good week until now. We are looking at concerns of various mine closures, disruptions, and that has been supportive. If you look at aluminum, that's trading at a 2-week highs. Copper is now trading at a 19-week highs. The prices have gained up by 3% in past month. There are concerns about mines in Panama, Peru, and Chile also have seen some mine disruptions come in. So the fears that copper would not be enough for all the energy transition demands next year seem to be very supportive for this one.
Okay, Manisha, thanks a lot for filling us in with all of that action that we're seeing in these commodities. But with that, let's move on and also talk about the big global story from the Red Sea, where Houthi rebels have launched attacks, leading to many companies diverting routes and going the long way around. So Maersk Shipping is one of the many shipping companies that have steered clear of the Red Sea. Let's listen into a slice of a conversation that the CEO, Vincent Clark, had with CNBC.
We have between 10 and 12% of the global GDP that is transiting through the Red Sea, and it is extremely important for us to guarantee safe passage for our ships in order to do the job that we're supposed to do. We can no longer guarantee the safety of our crew, and that's why we took the decisions that we had to take. But we're also certainly welcoming the initiatives that the U.S. Navy is taking to reopen the trading route. In the short run, we have a lot of ships today that are in positions, are taking routes that are significantly longer than what they were intending to do. So it's a stark reminder, just a short time after COVID, that disruptions in supply chains are still staying with us.
All right, that is the word coming in from Maersk, and we are going to keep bringing you more on that story as well. But for now, let's get you some national news updates. The Union Health Minister, Mansukh Mandavia, will hold a high-level review meeting with state health ministers over the upsurge that we're seeing in respiratory illness cases, including COVID. He will review preparedness of health facilities and services in various states and union territories. Remember, this comes after India's first JN1 case was detected in a 79-year-old woman in Kerala. She had mild symptoms. This came through on December 8th. Earlier, a traveller from Tamil Nadu was also detected with the variant in Singapore. The Union Health Ministry has urged states and union territories to maintain constant vigil over the COVID situation. So that's an important update that we want to bring you on this latest variant. But moving on now to some important international news as well. Donald Trump has been disqualified from Colorado's 2024 presidential election ballot by the state Supreme Court. And according to the state's highest courts, he has forfeited the right to run for re-election by instigating the January 4th and the attack on the U.S. Capitol. Colorado Supreme Court issued the ruling yesterday, but paused its effect in order to allow time for Trump to appeal the U.S. Supreme Court. So he has until the 4th of January to be able to appeal this decision. Okay, that's all the time that we have on this edition of Power Breakfast. We're going to wind down on that note. You stay tuned. Bazaar Morning Call comes up after the short break.
CNBC TV 18